In the wake of Wall Street's turbulent week, Asian markets showed signs of recovery on Monday, reflecting a cautious optimism. While U.S. stocks had suffered their worst day since April, they managed to bounce back by the end of the week, boosting investor sentiment across Asia. Tokyo's Nikkei, Seoul's Kospi, and Australia's S&P/ASX 200 all posted gains, driven by robust performances in sectors like semiconductors and technology. This rally, however, comes amid ongoing concerns about inflation and its potential impact on global economies. How will these mixed signals influence future market trends, and what does this mean for investors navigating these uncertain times? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button, leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. After a tumultuous week on Wall Street, Asian markets opened mostly higher on Monday, reflecting a sense of cautious optimism among investors. This rebound comes after U.S. stocks recovered from their worst single-day performance since April, ultimately finishing the week on a positive note. Despite this positive start, U.S. futures edged down slightly, while oil prices continued to climb. In Tokyo, the Nikkei 225 rose by 0.3%, closing at 38,758.96, and Seoul's Kospi saw a 0.7% increase, ending at 2,005.87. Australia's S&P/ASX 200 also jumped by 0.7% to 2,005.87, buoyed by reports of a 4.3% year-on-year rise in corporate profits for April. Meanwhile, the Shanghai Composite Index edged up by 0.3% to 3,097.86. However, not all Asian markets experienced gains. Hong Kong's Hang Seng Index slipped by 0.2% to 18,576.65. Taiwan, on the other hand, led the pack with significant buying in the semiconductor sector, pushing the TAIEX up by 1.3% to a new record. MediaTek, a leading semiconductor company, soared by 8.4%, while Taiwan's Semiconductor Manufacturing Corp. saw a more modest gain of 0.5%. Analysts Raymond Young and Bansi Madhavani from ANZ noted in their research that the strong global semiconductor cycle is bolstering Taiwan's economic outlook. This sector's strength is driven by advancements in artificial intelligence, cloud computing, and 5G telecommunications technology, which continue to propel demand for semiconductors. On the U.S. front, the S&P 500 recovered by 0.7% on Friday, reclaiming all losses from earlier in the week and extending its weekly winning streak to 5 weeks, closing just below its record high set on Tuesday. The Dow Jones Industrial Average saw a slight increase of less than 0.1% to 39,069.59, while the Nasdaq Composite surged by 1.1% to 16,920.79, setting a new all-time high. Nvidia played a pivotal role in driving the S&P 500 upward, with its shares climbing another 2.6% on Friday. The company's impressive profit report has cemented its position as a key player on Wall Street, particularly amid the growing enthusiasm for AI technology. Critics have questioned whether the hype around AI has inflated stock prices, but Nvidia's strong performance and optimistic forecasts suggest continued growth. The broader U.S. economy continues to show resilience, with consumer spending remaining robust. A report from the University of Michigan indicated that consumer sentiment weakened less than initially feared in May. Moreover, expectations for inflation over the next year rose less than previously thought, potentially easing concerns about a self-perpetuating inflation cycle. Despite these positive signs, inflation worries continue to cast a shadow over the markets. The Federal Reserve's recent policy meeting minutes revealed discussions about potentially raising interest rates if inflation worsens. This prospect of higher rates has unsettled investors, especially after reports last week suggested that the U.S. economy might be stronger than anticipated. Such economic strength could sustain inflationary pressures, complicating the Fed's efforts to balance curbing inflation without stifling job growth. Treasury yields, which had risen amid inflation concerns, remained relatively stable on Friday. The 10-year Treasury yield dipped slightly to 4.46% from 4.48% the previous day, while the 2-year yield, closely linked to Fed expectations, held steady at 4.94%. In the commodities market, U.S. benchmark crude oil prices rose by 21 cents to $77.93 per barrel in electronic trading on the New York Mercantile Exchange, following an 85-cent increase on Friday. Brent crude, the international benchmark, also climbed by 21 cents to $82.50 per barrel. Currency movements showed the U.S. dollar slipping slightly to 156.77 Japanese yen from 156.99 yen, while the euro edged up to $1.851 from $1.844. As global markets navigate these mixed signals, the critical question remains: how will investors adapt to the ongoing challenges of inflation and economic uncertainty? Share your thoughts on how these dynamics might shape the financial landscape in the coming months. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.